What's good, fam? Welcome back to J-Rush TV. If you're new to my channel, hit that like, comment, subscribe button. We cover all things business, investing, and men self-improvement content. If you return to my channel, you already know what's up. Back with another stock portfolio update review. This week been crazy. I was down definitely at least 10% this week, maybe 20, 30. We was getting spanked. We're gonna get into it, but in my power portfolio, we was getting spanked. You know what I mean? But let's just go to get into it. I know I like to get into the fear and greed index first. Let's put this to the stage. As y'all can see right here with the fear and greed index. Let me just go ahead and give this a little refresh. I think we in fear. We're neutral right now, but we was in fear the other day. We was in fear too long ago, if I'm not mistaken. Or did we even hit fear? I thought we hit fear, though. I thought we hit fear, like, this past week. Previous close was fear. Yeah. We just had greed a week ago. We was just at fear, man. It's just been a lot of turmoil going on, and I'm gonna get into it a little more soon. Let's see where the VIX at right now. The VIX was still up 10% on Friday, roughly 10%. The VIX was still up. Or this week, on the day, okay, it went down because Friday we had a nice big pump, but the week up 10% on the week, up 14%, almost 15% on the month. Crazy. So let's go ahead and start to go over the stock portfolio right here. So what I'm gonna do is I'm going to go through each company, just give some brief thoughts, what I've been seeing in the news and things like that. So first off, we have Nvidia that was up roughly 7% on Friday, but on the week, Nvidia actually held up pretty well in my portfolio. It seemed like it didn't want to go below 170. Once under 170 is just ridiculous. You know what I mean? When you get to the P ratios and stuff like that, the growth is ridiculous. It shouldn't be going under 170. That's what you see right here. It hasn't really been under that 170 price target, price range as of right now. I do have some updated news as well regarding Nvidia. Jensen CEO just did a small interview that I want to share with you all, just to show you all, like this AI trade is not going anywhere. You know, a lot of people are scared, nervous right now. A lot of people nervous right now. The AI sentiment is still kind of shaky. I'm gonna show some tweets too that I've seen, but basically Wall Street is punishing all these Mag 7 companies like your Amazon, your Metas, your Microsoft. They all, at the earnings report, decent earnings. They all have been fine, good earnings. Google did great, and they're getting sold off. Here's one influencer that I like, Amit, right here. You know, just give a little synopsis to the market. Pre-market's a bloodbath once again. I imagine margin calls for a second day in a row could be continuing for selling. It's incredible. It's quite incredible because last year when this happened, you could post it to tariffs. This time it's hard to blame one particular thing. My best guess is that markets are pricing Warsh as hawk for QT. He got chosen as the new Fed chair, so he controls interest rates. But I'm hearing he's not too fond on quantitative easing. He's more so quantitative tightening, which is QT, meaning turning the money printers off. QE is turning money printers back on, which is definitely leading to outflow and high beta like crypto. Crypto's getting spanked. Jobs data, this also didn't help. 200K layoffs announced in December, most since 2009, guys. That's crazy. That's one of the indicators for recession. We need jobs. If people don't have jobs, then they're unable to essentially pay for stuff in the economy. It's all a cycle. Everything works hand in hand together. If people don't have jobs, they don't spend money. People don't get paid. Companies don't generate profits. It's a trickling effect. The bright line, earnings growth across the board continues to be amazing, but it's almost like the market could care less. Maybe some reversal today of sympathy, but it's an ugly environment. Yep, and I agree. It's just nasty out here. You have Joseph Carlston here saying Amazon is literally an example of high CAPEX, high return. The entire company's history is spending a ton of money and growing the world's biggest revenue business ever. Netflix is another example. Spend is good as long as the return is higher than the cost of capital, which I'm confident it will be with big tech. Which I'm confident too. A lot of like over $600 billion of CAPEX is going to be spent this year. When I went over some of the earnings reports and things like that, I'm gonna go through right here. But yeah, I tweeted this out. If y'all don't follow me on X, definitely give me a follow. I tweeted this out the other day. I said roughly $600 billion in CAPEX on AI and cloud across the major hyperscalers announced in 2026. So my AMD, Nvidia, Meta, Palantir, Nebius positions, Nebius positions are going to benefit tremendously from this. That's a lot of money, guys. It's not going. This AI trade is not going anywhere. I don't know why people think it's going somewhere. It's not. They just reported for the year. They just reported CAPEX for the year. So all the spending is getting spent on AI and cloud. So this is where smart investors make the right plays while these companies are getting down and beaten up, specifically SaaS stocks. So back to NVIDIA, what I was saying with NVIDIA. Back to what I was saying with NVIDIA. Shay Buller, and NVIDIA CEO says GPUs sold 6 years ago are rising in price, and that it could take 7 years to fully size true AI demand. When the CEO is saying things like this, I don't know how people are kind of bearish, but maybe we need to hear it from the horse's mouth. Let's hear it from Jensen once again.
Last year, we saw an inflection point in agentic systems that are being developed and evolved. This last year, we saw an inflection point in AI. AI became super useful. No longer hallucinating. It's generating informed content. It's reasoning. It's thinking. It's doing research. It's able to use tools. All of a sudden, AI over the last couple of years went from being curious to super useful. The inflection point also came with it profitable tokens. Anthropic is making great money. OpenAI is making great money. If they could have twice as much compute, the revenues would go up 4 times as much. I mean, literally, these guys are so compute constrained, and the demand is so incredibly great. The number of enterprise users, the number of consumer users, the number of startups that are being built on top of these companies is just going through the roof.
So when you see numbers that are frankly remarkable, that $660 billion this year will be spent by the hyperscalers as we continue to learn, like we did from Amazon last night. You sit back and think to yourself, that's completely justified based on what you see?
It is appropriate and sustainable. And the reason for that is because all of these companies' cash flows are going to start rising. Yep. People are comparing it to cash flows. One of those numbers are wrong. It's just the cash flow is wrong. We are addressing the largest software opportunity in history. For the very first time, software is not just a tool. A tool is like Excel. Now software uses tools. So these AIs use Excel. And so I think the opportunity for this new era of software is incredible, and we're seeing it already moving the earnings of Meta. Nobody uses AI better than Meta. And so if you look at the way that they're using AI went from a classical recommender system running on CPUs to now a generative AI agentic system that is making recommendations.
Bullish Meta. We got some Meta in the portfolio.
The social media works and the way they recommend ads and help advertisers create content has fundamentally been changed, and their earnings show it. And that's the reason why they're investing so hard. They see just a much larger future potential for it. And not just one company. This is going to affect AWS's shopping and the way they recommend goods. This is going to affect how Microsoft's enterprise software works. Every single company sees the same inflection point, and that's why everybody's leaning in so hard.
I feel like that's the point that it's an interesting point. It sort of turns the way you need to think about these businesses on its head. That if you're just fixated on the spending side, as you were talking earlier about, they're spending such a huge portion of their free cash flow, you're kind of missing the story. The market needs to get its arms around that. You as well as an investor?
Yes. If you turn the clock back, Scott, to 2008, 2009, right? Amazon could have taken their profits and sent them back to us by way of dividends. Instead, Jeff Bezos said, I'm going to invest in this thing called AWS. Think of it as digging a gold mine. You have to spend a lot of money to dig the gold mine before you get the gold out. These guys are digging the biggest gold mine in the history of software, right? But it costs something up front. Now, the question is, do you believe Andy Jassy and Mark Zuckerberg and Sundar and Jensen that this opportunity is that big? Or do you have a special insight that causes you to understand there's no gold in the bottom of the gold mine? As an investor, I'll just tell you this. I want my personal net worth, I want my fund's net worth levered against AI, because all human progress is going to be derived from machines helping humans think and augment human thinking. And so whether it's owning NVIDIA, which is our largest public position, or whether it's Anthropic or OpenAI, all of these companies are going to be tremendous beneficiaries.
I want to make a clear
point. Is actually going to come to fruition. Isn't it inevitable that we're going to, at some point, overdo it, but we're not going to know that until it's too late.
It's not like roads. Roads, once you lay it down, it stays fairly useful for a long time. The way computers work is you build up the infrastructure, but then you start replacing it 5, 6, 7 years later. And so I think it's going to take us some 7 years, 8 years to build up to the level that we have to sustain. And after that, we're going to be refreshing and slightly growing. And so we've got several years to build out ahead of us. The important thing is this. You have to go back to first principles.
Godfather AI is telling everybody,
Computing has fundamentally changed. It used to be pre-recorded. Excel and PowerPoint and all these tools and all the software is pre-compiled. They compiled it and they send it to us. The way software works now, because it's contextually aware, every single time you use it, it takes into consideration the context, who you are, what you're asking about, what's happening to the world, what other information you give it, the context. And every single...
So I just want to give you a little insight on what Jensen Huang, the CEO of NVIDIA, the Godfather AI, the CEO of one of the biggest, largest companies right now in the world, pioneering this AI revolution, is saying. He's saying we need more compute. CAPEX is going to generate more profits for companies, but we have to reinvest into the business. You know what I mean? So, hey, that's what the CEO's saying, man. I'm going to follow Jensen Huang. I'm going to follow Jensen. You feel me? But yeah, we got a little Meta in here as well. Meta dip on the week. Meta's down 7% on the week. You know, they had a great earnings, good earnings. On a month, it's pretty much flat. And, you know, they fell as well. So there's only so much you can do. You just got to keep investing. Keep investing, guys. Keep investing. I want to pivot a little bit. I did go to Ahmed's investing event in New York City. So if you familiar with Ahmed, he's a big retail investor, influencer on the X community, YouTube, things like that. So I just want to give y'all a little sneak peek. Shout out to the men that I met out there. Good guys. Good guys. Nate and Davis. There's some early Palantir investors. Follow them online. So definitely want to go out there and network with them. So shout out to them. You feel me? If you didn't check this video out, it's about a 10, 12 minute YouTube vlog. So definitely check that out.
People say milk gang. Whose birthday is it?
Happy birthday!
For who?
For you.
Just landed in New York. Well, acting dumb, so even now, fit looking cool. So yeah, if y'all haven't checked this out, definitely go check this out. Got some good games. My camera.
Not rage bait him while he's speaking. The way you guys do in this channel. The amount of people.
If y'all want to check this out, definitely check that out for me, guys. Show some love, show some support. But yeah, the event was great. Let me share my screen again. But a lot of good people. I'm gonna do another recap video on that soon. Just giving some more of my thoughts and things like that. Next, I kind of want to get into AMD. The CEO of AMD, Lisa Su, and what she's just been saying, just to kind of reinforce all this stuff, guys, because like I keep saying, this is a very volatile market right now, but if you can make the smart investments right now, 5, 10 years from now, they're going to pay off. AI is here to stay.
AI is accelerating at a pace that I would not have imagined. So you see, AI demand from the hyperscalers.
We got AMD. Go back to my channel.
And what is the foundation of all of that is compute. And so what is really important for us is to ensure that we have the full range of compute. Now, as we go into the first quarter is usually seasonally down for us because we do have some consumer exposure. And I think the most important thing is we're actually seeing our data center business actually increase from Q4 into Q1, which is a show of the strength of the business, both on the CPU side, which is going like gangbusters, and with our AI capabilities and GPUs, we're seeing very nice ramp into the first half of the year. But yes, we're going to have an inflection point as we go into the second half of the year with our new, MI450 series.
MI450 RAM, guys. That's what I'm really banking on for AMD. The AI 450 ramp is going to be crazy. I think the second half of this year, going to 2027, is where I really see AMD starting to really generate a lot more profits, a lot of more revenue. You see 8% in a day. Tremendous bounce. But we still sold off pretty heavy this past week. It's still making me a little nervous. I'm not going to lie. I don't know if we going lower, if we going higher. But I don't know if that was the bottom, guys. I don't know if that was the bottom. Trying to stack up more cash. Try to buy the dip, but the dip keep dipping, and I ain't got unlimited funds. But while I'm already here, I'm actually about to buy some more AMD. No cap. I'm buying 15 more dollars. I'm gonna put a Q in for 15 more dollars of AMD. Yeah, I'm gonna do 15 more dollars of AMD. I have a lot, but I just fear I don't have enough. I have a lot. I just fear I don't have enough. Like, I need more AMD, and I think I need more Zeta. I need more AMD, and I think I need more Zeta. I'm gonna go ahead and put 15 more dollars into Zeta as well. Zeta sold off to 50. Zeta got down to, well, are we on Zeta? I just wanted to skim through all my positions right now. I'm glad I got a Hims. Hims is tanking right now. Oh my goodness. Hims is tanking right now. SoFi got to 19, under 20. Under 20, man. If you bought this dip, roll back up, 7% in a day, but it got ugly. It got ugly. SoFi still gonna do good. Anthony Noto just did a interview with some retail investors that I follow, so I'm definitely gonna be checking that out. It's about an hour long, so I'm gonna skim through that for real. Just want to get into some of my major positions that I'm bullish on this year. Zeta, we can go ahead and get into that. Zeta got to the 15s. Zeta got 15. They sold this down to 15. This joint, if you go back to my last video, this is at 25 a couple weeks ago. It got down to 15. I bought as much as I could. But like I said, guys, I don't know if we're going lower or if we're going higher just yet. I want to share something with you guys also regarding Zeta. Shout out to my man's Nick. Amazon advertising just printed ad revenue up 23% year over year. This is a huge bellwether for ad martech. I'm looking at you, Zeta. Yep, opportunity. Strong compounding margins. Reddit ad revenue 75% year over year. Amazon 23% year over year. Meta 24% year over year. Sub-theme developing ad martech. Take notice. You know what I mean? Ad revenue going up year over year. That's bullish for Zeta. Yes. So kind of just want to bring it home with you guys. Well, first of all, let me talk about Fubo, then we gonna nail it home. Fubo, my goodness. I don't even want to talk about it no more. I'm deleting Fubo out of my brain right now. I'm just gonna bag hold, honestly. But here's a little recap on that. Like shout out Stock Research Weekly. He said he's just holding his position for now. Video Saturday. ESPN reseller agreement, very important. They're doing a reverse split and no guidance. This is what sold the stock off crazy. We need clarity. Appreciate you guys out there in the front line. Not an easy task. I'm holding for now. Besides my 1,000 shares, hate to sell yesterday at a loss, of course. My grand vision of a multi-bagger, but I don't think at this point I'm hoping for a 2 to 3x before Disney buys through 30%. For now, it's day by day. Yeah, you just gotta. Yeah, management definitely took a little hit on this in the private portfolio, but cost of doing business, man. Thought the Disney merger would definitely, re-rate the business a little sooner. But hey, you take wins and losses. Long term, I think it still can be a solid play, but right now it's a lot of opportunities out there. So we just gonna have to bag hold for now. Maybe I trim, maybe not, but we're currently down $5, which isn't crazy. So wasn't a big position for me. Just hold, back, hold. But after earnings, this joint tanked. It's already in the twos, and after earnings, it went out to the ones. I never thought I would see this back in the dollar range. Post-merger, back down to these levels post-merger with Disney. That's crazy. I did not see that coming. I honestly did not see that coming. So shame on me. That's something I could not predict. I could not predict that. Shame on me. Let's go ahead and finish this video out with this last piece of news I want to share with you all. Good recap of like kind of what the market is looking like right now. It's SaaS. A lot of SaaS is getting sold off. So that's your Salesforce, ServiceNow, your Zeta, your Adobe. All these SaaS companies, software as a service, are getting sold off by Wall Street because they believe AI is going to disrupt these software companies, which doesn't make any sense because, first of all, if if AI, trying to find a quote, I can't find a quote I had, but first of all, if AI was going to disrupt software companies, okay, cool. That means your AMD, your Nvidia, your Nebius would be trending higher because you need more compute that's going to disrupt this stuff. You know what I mean? So at the same time, it's like, why are both sectors selling off? So it's kind of clashing between each other because it doesn't make any sense. You know, if AI is going to commoditize all of SaaS, then why isn't the market rotating heavily into semis and hyperscalers? Exactly. If Anthropic were to destroy CRM and ServiceNow, I imagine we need tons of compute, more than we can fathom. More than we can fathom if agents take over hundreds of billions of market cap for SaaS companies. Yet the market is selling off SaaS and its AI names, which doesn't seem to make sense if the AI demand for the SaaS carnage will lead to AI growth. Also, how is AI a bubble if we're talking about massive enterprise software companies being decimated by AI? The entire logic behind the sell-off feels more like forced structural rotation without a pure reason for why the rotation is happening. The forward PE for software had declined 35x in late 2025 to 20x currently, representing the lowest absolute level since 2014 and the smallest premium to the average S&P stock since 2010. Look at all these SaaS companies that are getting destroyed right now. 13%, 31%, 23%. So it just didn't make sense, you know? But this is when you become a smart investor, guys. This is when you have to do the research, look at the earnings report, follow me on X. I mean, I don't update quick, but I'm trying to share my opinions a little more in kind of my thought process on stuff. I do have a Substack I do want to start, just thoughts on my overall portfolio structure and things like that. It's one I'm working on now. I have a goal, one Substack every quarter. So I got about 2 months left to finish this one, and then I'm gonna start my other one soon. But yeah, be a smart investor, dollar cost average, do your research, and I think we'll all come out on top when it's all said and done. I'm still continue to buy I think I'm gonna start buying AMD again. AMD, Zeta, and Meta and Nebius in the private portfolio. I'll still continue to add, but adding a lot these past couple of weeks. You know, we get paid next week, so I'm gonna see how this market is looking this week. I don't know if we're going lower or not, but just trying to make it out to the other side, guys. Make it to the other side. If you enjoyed this video, make sure you like, comment, subscribe, and yeah, JRuss TV. We out. More videos.